Hello there, and welcome to the College Investor Audio Show. Student loan rehabilitation is now the topic to help you get out of default in 2026. Maybe you have New Year's resolutions you want to take care of when it comes to your debt. We hope to help you out a little bit today. But first, just a quick reminder, anytime you hear the topic on the podcast, there's always an article associated with it with all kinds of resources and links that you can dive in deeper and help you even more at thecollegeinvestor.com. All right, here we go. As federal student loan collections kick back up again, millions of borrowers who fell behind during the pandemic-era pause are again facing wage garnishment, tax refund seizures, and even damaged credit. For borrowers already in default, the path back to good standing matters more than ever. One option stands out for many: student loan rehabilitation, a program that allows borrowers to remove the default from their federal loans and credit report too after a series of on-time payments. So, compared with student loan consolidation, rehab can offer long-term credit benefits, but it also comes with some strict rules and timelines that you have to understand before you enroll in this. First of all, let's define our terms. What is student loan rehabilitation anyway, dude? Okay, so student loan rehab is one of the primary ways to bring a defaulted federal student loan back into good standing. When a loan is rehabilitated, the default status is removed. Collections stop. Hallelujah! And borrowers regain access to federal student loan aid, including Pell Grants, other federal loans, and work study. To begin rehab, a borrower has to enter into a formal agreement with their loan holder, the U.S. Department of Education, and make a required number of voluntary on-time payments. All right. For most borrowers with direct loans or loans from the Federal Family Education Loan FFEL program, rehabilitation requires 9 on-time payments made within 10 consecutive months. You can actually miss a month. Once these payments are complete, the loan is transferred to a new servicer, the default is cleared, and the borrower can choose to enroll in an income-driven repayment plan option. Really cool. And here's how monthly payments are actually calculated for you. So under a standard rehab agreement, the required monthly payment is calculated as 15% of the borrower's annual discretionary income, divided by 12. So discretionary income is generally defined as income above 150% of the federal poverty line for the borrower's household size. Because the calculation depends on income and family size, monthly payments can vary widely, to say the least. For some borrowers, payments may be manageable. For others, especially those with low or unstable income, the standard might be too high. Borrowers who cannot afford the proposed payment can request an alternative payment amount by submitting detailed income and expense information. Housing, medical bills, other essential costs are taken into account here, and the adjusted payment might be lower. The most reliable way to estimate payments and to request adjustments is by working directly with the government's default servicer. Here's how to enroll in rehabilitation. If this sounds good to you, check this out. Most borrowers in default are going to work with the Default Resolution Group, the unit of the Department of Education that manages defaulted federal student loans. Borrowers can confirm their loan holder by logging into studentaid.gov and checking the My Loan Servicers section. FFEL borrowers might instead see a guarantee agency listed. To request a rehab agreement, borrowers have to submit income documentation, which would be one of the following: either a recent IRS tax transcript or a signed copy of their most recent federal tax return, which would be your Form 1040. If you're married but filing taxes separately, documentation for both spouses might be required. Once documentation is received, the DOE, Department of Education, generally sends a rehabilitation agreement by mail within 10 business days. This letter outlines the payment amount, the due dates, the terms, all the stuff. The agreement itself is not delivered electronically. I hope that changes soon. So let's talk about rehab versus consolidation. I know there are those two big options. Let's compare and contrast, shall we? Borrowers in default typically have two main exit options: rehab or consolidation. There's a third, technically, which would be just paying it. But if that third was doable, you wouldn't be in default, right? Anyway, consolidation resolves default faster, within weeks, but that doesn't remove the default notation from your credit history. Rehabilitation takes longer, but the credit benefit is stronger. Once you complete rehab, the default record is deleted from credit reports, though late payments before default might remain. For borrowers focused on rebuilding their credit, qualifying for a mortgage, reducing long-term financial damage, rehabilitation is often the preferred route, if they can manage the required payments, of course. Okay, so what happens next? Once all the required payments are made, the loan is officially removed from default, and you're just given a new servicer for it. Borrowers receive confirmation by email within about 30 days or so, and then at that point, collections stop permanently. Eligibility for federal student aid is restored. Borrowers can enroll in income-driven repayment plans, and deferment and forbearance options become available again. Hopefully, you won't need them. Borrowers may also request a written letter confirming that their loan is no longer in default, which colleges sometimes require before dispersing their aid. Using the Federal Loan Simulator after rehabilitation can help borrowers compare repayment plans and avoid slipping back into delinquency. If you want to dive deeper into all the things we talked about and all the resources, they're all inside this article at thecollegeinvestor.com. You can also ask questions and get to know us. We'd love to help you along wherever you are in your money journey. Just search for the words The College Investor and connect with us on our socials. Thanks so much for stopping by today, and we'll talk to you again real soon.